there, welcome back to ET Now. You're tuned into Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Time now to take a look at some of the earnings that have recently come out. And first up, focus on consumption space. Now, ITC's Q2 FY26 results were largely in line with a strong margin beat. Cigarettes and FMCG segments drove growth for the company, while agri revenues, they declined on a high base. FMCG's premium and digital-first portfolios, they continued to shine, supported by resilient demand in staples and personal care as well. Paperboards and packaging delivered steady gains, and ITC expanded its footprint as well with the new cloud kitchens. Snehi is here to take us through what brokerages are making of it and the fine print of the numbers.
Well, yes, if you take a look at ITC's Q2 earnings, largely in line with street estimates, and margins have been a very good beat, good show coming over there. On a standalone year-on-year basis, revenue is up about 3.5%. Revenue is down about 3.5%, but this is in line with the street estimates. EBITDA is up 2%. Net profit is also up 2%. EBITDA margins, they've expanded nicely at 34.7 compared to 32.8%. The estimate was flat at 32.8%, but a healthy expansion on the margins front. But the overall sentiment around the ITC stock has been dampened by a 31% year-on-year decline in their agri business. Cigarettes seems to have done well. Revenue is up about 7%. Brokerages are estimating that the cigarette volume is up 6%, so that also looks healthy. If you take a look at the FMCG segment, the revenue has gone up 7%. Staples, dairy, premium personal wash, agarbattis have done well. Aashirvaad, atta, salt, Mangaldeep, agarbatti, they've all done very well for themselves. So has the biscuit and the yippee noodle segment too. For Fiama and Savlon also in the personal care have done well. For agri, revenue is down by 31% on the back of a strong base. Paperboards, the revenue is up 5% driven by volume. So this is a welcome change for the numbers coming in the paperboard segment. And lastly, for the food tech business, they've scaled up to 60 cloud kitchens across 5 cities, and 7 new kitchens have been opened during the quarter. If you take a look at the brokerage view, Citi has maintained its buy rating with a target price of 500 rupees per share. Morgan Stanley is overweight on the stock with 469 rupees per share target price, and Goldman Sachs continues to be bullish, buy rating with a target price of 490 rupees per share. So that's the take on ITC's overall numbers. Overall, in line with estimates, a good beat on the margins front.
All right, that's about ITC, but Snehi, take us through Swiggy as well. Seems line and Inline said this time around the online food ordering and the grocery giant did